In this video, I'm going to take you through the NASDAQ 100 top 10 holdings on weekly charts and give you my opinion and where I think things are going. So stay tuned and watch.
Best of Us Investors presents Carrie Griegmeyer.
All right, so I wanted to take you through a couple, or the top 10 holdings of the NASDAQ 100 and their weekly charts. These are weekly points of view, not daily. I use the weekly because it's more or less staticky. Daily, you get a lot of movement. It can be deceiving. And weekly just gives you a bigger picture, a bigger overall point of view of what's happening. So I'm going to start with Apple, the largest holding in the NASDAQ 100. It ranges between 11 and 12% of basically all the NASDAQ 100 moves overall. And presently, I look at slow stochastics, a number of EMAs, along with on-balance volume, and basically the ranking of the bullish to bearish number of stocks within the NASDAQ 100 that are performing on a bullish level versus a bearish level. So with the Apples, right now, the slow stochastic is above 50, which I like. It's more bullish. It's at 73.07 as of today of this recording on March 20th. Anything above 80 to me is cautionary. And typically when you see it break below 80, as we saw back around mid-March, you start to see a pullback in the position. And then when it's below 20, that's more bullish, and when it breaks 20 and more importantly above 50, that becomes a bullish move overall in my approach. I use the 9, 13, 90, 250, 425, and 600 EMA moving averages. Now 600 is recession, depression environment. That's no bueno. 425 is not good. It's more of a, I look at this where we're at right now as this market has to reset. We have basically pumped so much money into the system with quantitative easing since 2008, and that has manipulated the true values of these companies. Not to say these companies aren't doing wonderful things. It's saying that they've been highly leveraged against and pushed higher because of cheap and easy money. So what I like to look at is that 90 period, which is that blue, sort of turquoise, I guess, line here. And as you can see, Apple on a weekly chart is above that. The 90 period here is 143.81. We're right now trading at 156.33. If we see a break below that, we definitely could see that October, well, actually December lows or so of 123.98. And 112.58 would become, in my opinion, the support level there. Break below that, well, then, all bets are off and things get really crazy real quick. We'll jump to Microsoft, which is the second biggest holding overall. And that is also a 11 to 12% holding within the NASDAQ 100. So two companies represent basically 24% of the overall allocation of assets in the NASDAQ 100, which in my opinion represents 24% of the overall movement of the NASDAQ. Now, the slow stochastic here is above 50, which is bullish. It's 55.84, above the 90-day on the EMA weekly of right now. The 90-day is at 255.60, and we're trading at 271.29 as of this reading. 42% of the NASDAQ 100 is bullish. That means 43% is bullish. That means you've got basically 50 or 47% that is bearish in the sense of where it is trading at. The on-balance volume has moved higher than its 13 period moving average recently. And a lot of this can be contributed to the AI movement, the what would you the Chat GPT-3, GPT-4 movement, and because of their involvement in money, basically what 11 trillion or 11 billion was put into OpenAI to develop this, and now they're reaping the rewards of it. So these first two companies, which are the two biggest holdings, Apple and Microsoft of the NASDAQ 100, are basically moving this NASDAQ 100 around a bit. And based on what they do. Let's jump to Amazon weekly here. Amazon's sort of a different story. As you can see, since the beginning of 22, it has been on a declining point of view on a weekly chart. This is a consumer-based company. We buy goods from Amazon, if it's toilet paper, if it's electronics or whatever. What this is telling me is the consumer is weakening. They're not spending as much. Amazon announced this morning they're laying off another 9,000 people. That means their business is slowing, means the consumer is tight on money, and there's less money in the system and less money in your household, which means you spend less. Amazon is taking the brunt of that. Its slow stochastic is at 51.43. Which on a intermediate term basis right now is bullish, or right at the bullish element. But once again, I go back to the bigger picture. Consumer is slowing, and they're taking a hit. It's hitting right now 425, which is 96.59 is their 425 EMA, and that to me is a no bueno. Not into it. Pardon me. And so not something I want to be involved in at this point. Let's jump to Google. Google, where is it here? Alphabet. There we go. Alphabet, or Google, also since the beginning of 22 has been on a downward trend. It is below its 90-day period EMA. It's bounced off it a handful of times. It's just, these guys are dependent on ad revenue, and if your business is tight on revenue and cash flow, you're cutting back on marketing, you're cutting back on staff, you're not spending as much, and that to me is a concern. Support around the 250, which is 92.12, is a support area. It's bounced around that area about 3 times since October. A break below that, this time I think we could definitely see more of the 76.48 range, which is the 425 EMA. Really just depends on where the overall economy is headed, and in my opinion, that is more south than north. Let's jump to Meta. Meta is defying gravity, in my opinion, and the reason is because so much talk about TikTok being banned in the EU, European Union, for government workers. They can no longer have TikTok on their government phones. And here in the United States, there's a lot of banter in Washington about banning TikTok, period. Getting it out of the country, which Meta would benefit greatly because it'd be a move to Instagram, back to Instagram. It would be a move back to Facebook. You would eliminate the biggest competition of Meta, and that is TikTok, by this happening. Right now, it's at 195.45 as of this recording. It is just sitting at the 90-period moving average of 196.44, but is moved between basically the 250 with moving average EMA, which is 204.64, and the 425 at 174. I suspect it will drop back down to that 425 EMA, and we will see if it holds. If it doesn't, then I'm looking at like 150, 140, 150 as a target for Meta at that point. All right, let's go to NVIDIA. NVIDIA is also benefiting from the AI movement, as Microsoft and Broadcom is. We'll show Broadcom here in a minute. But the slow stochastic is in that caution zone, just at 79.35. And as you can see, it's above its 90 period. It's been trailing on this, or sort of riding this 9-period moving average which is 227.64. So we could see a break towards that, and if it holds, chances are we'll move higher from there. So from an intermediate term standpoint, this is bullish, but I keep going back to the overall macro picture on a global scale. This eventually gravity will pull this down. It's a question of how far. In October at 108.08, that was its low in October. We'll see. At this point, it's still a bullish trend, but I am cautioned because that's slow stochastic, because of just the weakening trend of the overall market at this point. It's a wait and see, in my opinion, but I would not personally be adding to this in my overall opinion. From there, let's jump to Pepsi. This is just a staple, man. This is just solid, and has been since beginning of 2019. It just bounces on this 90 period moving average, which is right now 163.48, and it's presently trading at 176.78. This is just a long-term hold, in my opinion. You pick up a couple shares down when it gets close to that 90-day EMA, as you can see here, back in October, back in June, back in March, go back to 21 in March again. So chances are we may see a pullback in Pepsi down towards say 10, and from a long-term perspective, this is pretty good. Slow stochastics at 72.25, so it's getting a little rich in my opinion. Buy opportunities around 20 on the slow stochastic and that 90-day EMA, and as long as their bank doesn't dry up for some reason, then Pepsi is a good looking thing, stock for long term. Let's look at let's see, Broadcom here, which is symbol AVGO, and they are, as Microsoft, as NVIDIA, are all benefiting from this AI movement. Slow stochastic is 78.05, a little rich in my opinion. But since October, it is riding this 9-day EMA, so it's something to definitely consider. It's above its 90-day intermediate period, which is still bullish in my opinion. Dips, as long as it sustains that 90-day EMA, this is a steady ride right now. But like I said, macro gravity will take effect at some point, and we're seeing that with the central banks of the world, Bank of Canada, Bank of England, Bank of Japan, Federal Reserve, I forget who else, have all come out and basically backstop their banks, which is concerning to me. Oh, Swiss National Bank did the same. So that's concerning to me. It tells me there's a problem in the system. Banks are vulnerable, especially small and mid-sized banks. KRE is that ETF. Go check that out. And last but not least, Mr. Musk, Elon Musk. Let's check out his. I am, for full disclosure, I am short on the Qs and I'm short on Tesla. And right now it is bouncing between this 90 period, which is 221.16, and the 250 EMA is 167.20. It's been bouncing in that area for the last couple weeks, and the slow stochastic is at 27 or 27.71. I gotta believe this is a company that, as the overall macro picture becomes more and more negatively obvious to the world, you're going to see Tesla's going to have a push down. I would expect 123 or 425 EMA, and more of a deep recession environment of 79.87 on the 60-day EMA is sort of that range of target that I believe Tesla will end up in. And honestly, would be potentially a really good opportunity to add to your collection in your portfolio. But right now, there's just so much question of what's happening, and what's happening with the banking system, what's happening with our overall financial landscape. And the fact that, in a way, if you think about this, let me pull up this chart here for you. If I can find it, give me a brief second. This is the discount window. And basically what it represents is the discount window is where banks go to exchange their hold to maturity assets, which are like MBS, mortgage-backed securities, and treasuries. And in 08, we saw a pretty sizable move, basically $100 billion, I think was accessed in 08. COVID was more in that 50 range, 50 billion. But here in the last week, particularly this weekend, we've seen over 150 billion accessed by banks. Basically, this is a form of QE, which is in a way a bullish. If we see more money, if we start to see checks go out to people, individuals, that's a bullish move. It's the same thing that happened in 2020 with the pandemic. I think it's also a recipe for disaster in the long run, but it is something that is happening. So take that into account, be risk managed, if you got loss, if you're in a position and it is headed south, this is an environment where this headed south could go very, very, very deep. All right, there you have it. We have an environment where we're seeing banks being backstopped. We're seeing money flowing back into the system in a form of quantitative easing in a sense. And that tells me, well, the markets could see some downside. And that's where you have to risk manage well. I hope these charts and my explanation of what I see coming and see opportunities ahead, please take into account that you need to risk manage. You need to do what's best for you. Consider your long-term investment goals. But more importantly, always smile and have a good time, because this too shall pass. Just take advantage of the opportunity. Live loud.